Now, SCHD, or the Schwab US Dividend Equity ETF, is arguably one of the best high-quality dividend growth style ETFs that anyone could honestly retire with. And although we talk about SCHD all the time, and I made it very clear that I'm looking to have this be a large portion of my long-term portfolio long-term, considering I already own 637 shares of SCHD and am buying more and more shares daily. In this video specifically, we're going to go over 3 specific reasons on why I personally think and why I personally am using this ETF SCHD as a one-size-fits-all, more or less retirement vehicle that I'm real life planning on living off of later on in the future. So if you're a long-term dividend growth investor looking for that quote-unquote perfect investment vehicle long-term, make sure to stick around, drop a like down below, and let's get right into this one. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So just to back up for a second, SCHD is the Schwab US Dividend Equity ETF. We've talked about it a lot on my channel. I've made it very clear that I'm a huge fan of this one. And I'm definitely not alone. There's over 55 billion with a B total net assets in SCHD as of the filming of this video. But without wasting absolutely any time, let's get into one of the first reasons on why I think this ETF could be a perfect investment vehicle for retirees to hold on to forever. The first reason I think SCHD is perfect for a long-term investment to hold through retirement is the fact that SCHD has grown and grown in ETF price long-term. Now, whether you're going to be retiring off of dividends completely or utilizing the 4% rule, or maybe doing a little bit of both, you're going to want to hold on to assets, hold on to equities, real estate, whatever the case might be. You're going to want to hold on to assets that are going to appreciate long-term. Now, of course, there's different stocks and ETFs that have grown faster than SCHD. There's certain stocks and ETFs that have grown slower, but this ETF honestly sort of gives you a little bit of everything, pretty much all the good and none of the bad of most ETFs out there, in my opinion. Now, this ETF is up around 214%, and this is since around late 2011, early 2012. So if you bought this ETF way back in the day, let's say around 12 or 13 years ago at $25, $26 per share, now as I film this video, it's in at $80 per share. So if, of course, you're a retiree that's going to be using some of your portfolio to sell off, to use that money to pay your bills, or of course use dividends, either way, you're going to want to hold on to investments that are going to appreciate or at least have a history of appreciating long term. The next reason on why I think SCHD is a perfect investment vehicle, especially for those that are looking to use it for retirement, is going to be, of course, none other than the dividend. Now, SCHD, as of right now, where it's trading, has a current trailing 12-month dividend yield of around 3.59%, more or less. Now, of course, the math is very simple. For every $100 more or less that you invest in SCHD today, that means that you're going to be earning a forward payout of around $3.59 on a yearly basis. Now, before you say that doesn't seem like all that much money, for every $100 you spend, you're only going to get around $3 or $4 per year in dividends. You have to keep in mind that, for one, this ETF has a tendency, at least historically, to keep growing in price over time. But even more important than that, this is the very, very important aspect and one of my favorite reasons and why I'm personally using this as my retirement investment vehicle, is the fact that this ETF has a tendency to grow their dividend consistently year after year after year. And to go over some actual stats, looking right here, the trailing 12-month dividend growth rate, which means SCHD has grown their dividend trailing 12 months over the last year around 8 or 9%, which is a significant increase year over year. That means that whatever dividends you were getting paid 12 months ago, you're now getting paid 8.86% more. But some more important stats: over the last 3 years, 9% dividend growth rate. The last 5 years, 12.8%. The last 10 years, 11% dividend growth rate. Now, of course, could SCHD start to slow down their dividend growth? Could the dividend growth even be completely wiped out? Of course, anything can happen in the future, but just going off of historical data, this ETF has paid investors more and more over time, consistently for the most part, other than a few small blips in history. Now, why is this important in the context of retirement? Why do you want to get paid more and more in dividends over time? Well, unless you've been living under a rock, everything seems to just be getting more and more expensive long term. Rents are going up, mortgages are getting more expensive. On top of that, things like groceries, property taxes, utility bills, basically everything is getting more and more expensive. Now, unless you think that's going to change, unless you think that things are going to get much, much cheaper in the future, which of course that can happen. I personally hope that does happen, of course. I honestly don't think it's going to happen. I think we're going to see inflation continue at 2 to 4 to maybe even higher than that, which means you need to have investments that are going to at least match that, if not beat that, hopefully. So just going off of some rough numbers, if inflation continues at, let's say, 2, 3, 4, 5% per year, well, if you were to bought into SCHD and you're getting around 8.86% dividend growth, that means that in theory, of course, you're beating inflation as far as cash flow from your investment. Now, during retirement, that's going to be very important, especially if you're going to be cutting off all of your active income and living off of dividends, or of course, if you're going to be living off the 4% rule. Either way here, you're going to want your assets to either become more and more valuable, or if not also pay you more and more in cash flow long term. Now, the last and final reason I think SCHD is a perfect dividend growth style investment for long-term investors looking to either live off of dividends in the future or just build a massive portfolio and then sell off when it's time to retire. The last reason is sort of a big one, but it's overall this fund's fundamentals, how this fund works, the objectives, the strategy, the index that it tracks, etc. Now, we've talked about this before, but just going over some of the basics, it says this fund's goal is to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. Now, without going through the Dow Jones US Dividend 100 Index in this video, because we have talked about it plenty of times in the past, and go back to some of my older videos and watch it, this is a super solid index that has a very rigorous screening on letting stocks in and, of course, kicking stocks out of it. This means that in theory, at least, you can invest, sit back and relax, and just know that the underlying index that SCHD tracks is most likely going to be picking the perfect investments within the fund, or at least it has historically, going off performance. Also, this fund is very low cost, so when it comes time for retirement, you're not going to have to pay a massive expense ratio just to hold on to an investment, which is awesome. Just a 0.06% expense ratio is very, very cheap. Now, although we can go on why I think this is the perfect investment vehicle for retirees, just going off of the fund's performance as far as price return goes, making sure that your investment vehicles are growing over time, along with the cash flow and dividend growth rates and the overall fundamentals that this ETF has. Just those three reasons alone, and like I said, we can go on, make this ETF a worthwhile investment vehicle to look into for retirement, at least in my opinion. But lastly, let me just leave you guys off with this one. A $10,000 investment into SCHD, the ETF that we just went over in detail, would have turned into around $45.4 thousand in just 12.72 years. Now, this is, of course, with dividends reinvested. So with dividends being taken out, let's say you want to live off the dividends, you still would have been left with a $38.8 thousand investment after just 12.7 years. This ETF has pretty much everything dividend growth investors are looking for, at least on paper. And for that reason, this is going to be a large pillar in my long-term portfolio for many, many years to come. But now, lastly, most importantly, I want to hear from you guys down below. Let me know, you guys, if you're currently using SCHD as an investment vehicle that you're looking to use later on towards retirement. And if not, comment down below some of your favorite stocks or ETFs that you're buying today to use later on. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.